If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey everybody, welcome back to another live stream. Good morning, happy Tuesday. Craziness in the markets, man. The gold world, silver world. Actually, this is kind of surprising. It's the first day in a while that we are seeing. Hold on, let me fix my little drawing pin here. Hold on one second. First day in a while that gold is up more than silver. I mean, gold and silver seem to go up every day, but in a rare occurrence, at least for now, gold is up more than silver. It's like the first time in a while. Anyways, gold is just running away. It's just running away. It's moving so fast. It's just flying high here. So what do we do? What's I've been thinking about this one, and it's a bizarre thing because no picture. Can you guys see me, hear me okay? Everything look and sound okay on your end? It's a bizarre thing because I feel like as a trader, after all these years of doing this, I still feel like there's something I should be doing when I have this kind of trade on. But again and again and again and again and again in my trading career, I have been rewarded for learning to do nothing. It's really hard to explain, but like what I'm saying is, okay, I get long gold and it feels like as traders, we should be doing something. It feels like, oh, I should be taking some off. I should be taking some off. I should be locking in gains. Let me take profits here. I can rejoin here. I'm going to get back in and I can. It's crazy that over the years of doing this, the less I do, the less I get in there and kind of mangle with my activity in the market, the better I do. Now, I'm not necessarily saying just like buy and hold, although buy and hold in gold has been the best strategy in the world in the last few years. I'm saying that when it comes to my trades that work, I am a home run trader. And what I mean by that is I am a trader that goes for huge wins. And that has always been 110% what has led me to the most gains, the best performance, the best strategies, the best, like home run trades are what work for me. The reason they don't work for everyone is because everyone is different. Some traders are base hit type of traders. And if you're confused by all the baseball references, if you're outside of the US, first base, when you're in baseball, you're trying to go around the whole diamond. There's a base here, a base here, a base here. Home run traders are trying to run the whole thing in one. And it's hard to do, right? You have to hit a crazy, crazy good hit with the baseball. Base hit players are people who just, they try and just get on base. They just play to play the bases and they move on to the next. And there's different types of traders. There's people who are base hit type traders. But for me in trading, I have always been a home run type trader. Now you might say, well, of course, that sounds obvious. Everybody wants to be a home run trader. But the downside of trying to be a home run trader is you take a bunch of smacks to the face before you finally catch a good trade. Right? So I've always been a home run trader. And what that means is that I've had the most success doing the least, where I just catch a good trade and it just goes ridiculously in my favor finally, Why do I say finally? Because there's so many trades where I enter a position, stopped out, enter position, stopped out, enter position, kind of goes in my favor, comes back, stopped out, enter, comes all the way back, stopped out. And then finally I catch the big one. It's like you're going fishing and you're catching nothing 99% of the time, but that 1%, you're catching the big one, right? So in my style of trading, in my approach of trading, I like to observe the macro story, and I like to look for rare events, rare occurrences in markets where you get these massive directional pushes. And when I say in the last few years, like, hear this and understand, this is the agony of being the type of trader that I am. In the last few years, I've got like 5 trades that come to my mind, 5, 6 trades in the last 2 years that have accounted for like 90% of my gains. That sounds awesome when you're in those trades. It's horrible when you're not in those trades and you're stuck in a drawdown. Anyways, I'm telling you all this because, again, right now I've got a great one going. This gold trade is a monster mover. But to catch this gold trade, which I am up $60,000 on right now, plus, I mean, it's more than that. To catch that position, it would be unfair to me as a content creator to only show you that and not tell you that also I have to take trades where I lose 5K, I lose another 6K, I lose another 5K, right? In order to finally, eventually catch this move, okay? That's the real story that social media won't tell you. Social media will show you this trade happily and not tell you, oh, by the way, I'm also losing like 15, 20 grand before I catch that trade. Or I'm losing $70,000 before this, and now I'm back to getting 60K plus, so now I'm still down 10K, right? That's the context that really matters. Anyways, let's get more technical because I want to get through some charts today. So gold is running strong here. What am I going to do with the trade? Man, I am looking for an opportunity to trail stops. The 4-hour time frame looks really strong. We've gapped higher. We have not filled that gap. I am looking at this area, but I need to stick to, again, what did I start just saying a second ago? The most rewarding thing in my trading has been learning to sit and wait, continue to follow the trend and follow the macro and just do that every single day. And what that means is I don't need to trail my stop and put it right here. Oh, I don't want to lose any gains. Oh, boop. And then it does this, right? No. If I'm sticking to the same system that got me here, then I need to stick to the same system that got me here, right? If I'm going to be consistent in what I do as a trader, I can't be changing things up just because I've got a good trade here and I'm afraid of losing the gains. Look, you guys have to understand, if this thing drops, I could lose out on $30,000 of potential gains. So I told you I'm up 60 on this whole thing. If I give back half of it, would it stink? Yeah. So Nick, why don't you trail your stops? Well, because if I did trail my stops too tight, I probably would have gotten taken out of this thing and never even had this gains. So I trail stops loosely as long as the macro still favors gold. And I still think that it does. Edge Finder score here, which is part of the reason I got into this trade, or a huge reason. Edge Finder scores a +5. We're currently still looking good. Technicals look strong to the upside. We have technical momentum here on the 4-hour and daily chart. The monthly seasonality still looks good. COT positioning. Institutions are still heavily long on gold. 87% long on gold. In the latest change, they bought more, right? So institutions are buying and continuously accumulating more gold. So I don't want to fight that. I'm going to stay with that. That's going to factor in bullish towards my overall bias of gold. Fundamentals, a little bit mixed. -1, so it's not sharply bearish or sharply bullish. It's just kind of in the middle. What's kind of hurting that score? Well, the producer price index came in hot, so pushing our inflation bias to slightly negative. Some sticky inflation there is not great for gold. It could signal that, they may need to keep interest rates higher for longer, could strengthen the dollar a bit, etc. Although right now the dollar is getting hit, or at least the perception of the fiat value of the dollar, the purchasing power of the dollar is down. due to all the uncertainties around tariffs, et cetera, expectations of money printing, et cetera. Anyways, economic growth looks overall slightly bearish for gold. And that's because we've had good economic growth data. Remember, gold likes weak economic data. We've had some stronger than expected economic data here, specifically the services PMIs, retail sales numbers, and GDP growth coming in strong. Jobs market bias is slightly tilted in our favor for gold bullishness. Here's why. NFP was weak. That is going to be bullish for gold. ADP, another payroll number tracking, also bullish for gold because it came in lower than expected, right? That's weak. Jolt's job openings also came in weak. That is good for gold. So overall, we have a mixed fundamental view, but we have a good technical score, Edge Finder overall score, sentiment score, and commitment of traders report. Stay bullish. That's the, for me right now. How am I going to manage this position? I'm going to look for any sort of higher lows, and I'm going to continue to watch the macro. If we get something like this, right, where we can see some sell pressure come in, but then buyers step up, push it higher, then I will know where to put my stop loss. But right now, what am I going to do with this position? I'm going to do nothing. I'm going to let it run. And if it wants to keep going, amazing. Guess what? If it comes crashing down, if gold collapses back below this support level, then I will take profits on this position. And yes, that will mean that I give back a lot of these gains. It wouldn't be the first time that it's happened to me, and it certainly won't be the last time that it will happen to me if that does occur. You have to sort of accept the pros and cons of any strategy. You know what the pros are of that type of approach? If I'm right and gold continues, which I've been bullish on gold, if we're still going to see this thing run up, gold could make a shoot to 5,000 and I could just continue trailing stops. Whereas if you're somebody who takes profits, you're long gone by the time we get to 5,000 for most traders. The nice side about trailing stops is that I have unbound potential for this thing if it wants to run like HE double hockey sticks. If we run to 5K on gold, I'll be in there. That's awesome, right? That's the upside of my strategy. The downside, and my strategy, by the way, is not just the technical aspect. Trailing stops is just how I manage the position. I have to still like the macro for me to be, willing to trail so loosely on my position. So overall, I like the macro, I like the situation. And I should say not necessarily the macro fundamentals, because fundamentals I just mentioned are kind of mixed, but more so the uncertainties in the world right now. Gold is just running for the hills here as people are, worried about the whole, tariff resurgence stuff. Anyways, taking a look at the NASDAQ, you can see NAS is pushing lower here this morning. Yesterday's futures trading, we did see accumulation come into the market intraday, but then back smack down here this morning. Watch this level today because I'm really curious to see if the bears are actually able to close below this 25,100 level, or 25,200 level was really what we were saying yesterday. So let's watch, see how the price closes today for that NASDAQ. I don't have a strong enough bias one way or the other on NASDAQ. Somebody asked, you don't take partials, Nick? No, I do not. There's nothing wrong. I know there's all sorts of different traders who say, oh, my way, this is why I don't do that, or moving to stops to break even is stupid, or no stop loss is stupid. I'm not one of those traders. You do what works for you. There are many ways. You can trade with no stop loss and make money. You can take partials and make money. You can trade with the trailing stops and make money. You can trade technicals only. You can trade fundamentals only. I'm not someone who's going to tell you you can't make money if you are making money and you've backtested your system. Personally, I don't like the idea of taking partials. I would much rather use trailing stops. The reason for trailing stops is because trailing stops allows me to wait for the market to tell me when we've broken a critical spot and just get out of the trade. I don't take profits because the trade is working. I take profits because the trade is breaking down, right? That is my approach to letting winners run. When you're trend following, when you're truly trend following, it's a lagging indicator. You follow what the price is doing. If the price starts to no longer be trending up, you follow the exit, right? Does that make sense? What do you think about the Japanese bond? We've got to talk about it, man. We've got a lot to do here today. So let me keep moving on my charts. NASDAQ getting a -4 here on the Edge Finder. So -4 tells me, all right, I'm going to stand clear of this one. I'm not willing to short it. because technicals are still in a longer term upward trend. Although I will say this, if you get some growth metrics that start coming in soft, if the jobs market stays weak and inflation stays sticky, that is an environment in which there could be a technical breakdown in the stock market that would be potentially, in a very rare sense, a shortable one for me. But we're not quite there. So if we were to see technical breakouts to the downside, right, if you start to see critical areas, especially, this would really be one of the critical spots for me to be willing to even short the NASDAQ or S&P 500. We would have to see technical failure here, right, at major levels of support that we had going back October, November, December, etc. If we were to break that technically, excuse me, and also have a macro layout that looks really bearish, which, by the way, let me outline what I mean by what would be a macro situation that it would be bearish for me in the stock market. It would be inflation bearish, which we're already getting, right? Inflation is still sticky there, but I would need a stronger reading. Like if we were to see like CPI come in higher than expected, or PCE fail us, which I think we're about to get a PCE number. If you add in that, we have a stronger inflation reading that's just problematic, which really dashes some of the hopes for rate cuts. And you also have the jobs market weaken further. If you get that scenario, and then of course, if GDP numbers or retail sales, if something came in more bearish on the economic data front, I really need a good, clear signal to get short the S&P 500 or the NASDAQ. And we're not quite there, but we are at a -4. We also saw institutional selling on the NASDAQ in the latest COT report. Institutional positioning is a bit mixed here, slightly prefers the long side on NASDAQ. But when we take a look at, let's take a look at SPX. SPX, they're actually a little bit more on the short side and also got more bearish in the latest filing. So technicals, if they were to flip bearish, economic growth, if it were to flip bearish, basically for me to get short the NASDAQ and S&P 500, I need like all my readings to give me a bearish reading. I need all systems go. We've got problems. Houston, we got a problem kind of thing. Like that's the only way I'm going to start actually getting to the point where I'm like, okay, yeah, maybe small short positions and trailing stops to the downside could make sense. But it is probably the hardest trade in the book. You want to talk about the hardest trade in the world? Try shorting that. That is the hardest trade in the book, in my personal opinion, even on an intraday level. Even on an intraday level, shorting the S&P, shorting the NASDAQ, that's a very difficult trade. Now, it's a very lucrative trade if you get it right. Like, look at this. If you're short on that candle, that's like 30 days of gains. Let's do the math really quick. That is, ready? That is 42 trading days worth of gains. Or I'm sorry, 30 trading days worth of gains wiped out in one candle. So if you're right on the bearish side of the indices, you can make a lot of money. The problem is you're very unlikely to be right on it because it's very hard to short something that tends to drift higher. Anyways, won't spend too much more time on that because I'm not really ready to short indices and I don't want to sound like I am. I'm just pointing out what it would take for me to get there. Dollar dropping hard here. Uncertainties around the tariff circumstance situation with Europe and the U.S. kind of at a disagreement. I believe Trump is also doing some, is it Davos or some NATO or thing? I think some big meetup where he's going to be speaking. People are a little bit nervous about a bit of stalemate there, where the U.S. is like it's critical that we have Greenland or that we have the ability to protect and gain access to those resources, etc. Meanwhile, Europe is feeling disrespected by the whole situation. So it's causing a lot of uncertainty in a conversation that we haven't had in a minute, which is the the whole trade war stuff. And allies of the United States, the European nations, are feeling really frustrated. I think there was specifically something with France's president speaking. U.S. and France leader Macron and Trump had a bit of a exchange of some sort. just saw that briefly this morning when I was looking through, just scrolling through news. But anyways, yeah, it's interestingly, it's causing dollar bearishness, but in some ways, it's strange. If the US tightens up its trade deficits, in some ways that's a dollar bullish thing. But it's it seems to really scare the dollar in the sense that, trade dynamics becoming less centered around the US, if that is a possibility, it does, fuel the de-dollarization trend. So anyways, Trump speaks tomorrow, according to Forex Factory. Gotcha. Thank you for that. Yeah, really big move to the downside on the dollar index. You've also got this area of what we thought would be potential support, not holding it all, at least for now. I don't have a strong enough bias, at least last time I checked on Edgefinder. Let's just take a look here at dollar pairs. I'm going to switch over to top setups. What I'm going to do is I'm just going to search USD and see what we've got here. So, by the way, check it out, guys. It's here. US dollar. Heck yes. Some of you guys have been waiting for this. We have had a lot of requests for this. The US dollar index has arrived to Edgefinder. Now, the reason we took so long to add this is kind of, you have the basket of US dollar pairs, but what the DXY is a useful on its own indicator of the status of the dollar. And what we do here, and it might be, let me check, is this, actually, I don't think it's going to show up in here because I think we have a filter. Yeah, we don't have it's not going to show up on our asset scorecard, but it will shortly. I'm going to write it down because I'm going to get it there. Asset scorecard. Scorecard USD. All right. Yeah, I'll get that added into your asset scorecard for the US dollar after this stream. Anyways, yes, the US dollar index has arrived here within top setups. What that means is it's just taking a look at our collection of data points and specifically studying just the US dollar index. Trend has recently been up, although after today, you're probably going to see that flip bearish, depending on how things play out here. But yes, this is looking like you're having a bit of a reversal here, right? So we had some momentum forming for the dollar, now breaking to the downside. So we'll see how that all plays out. But yes, it's fair to say that this dollar drop is largely due or largely in response to this, geopolitical uncertainty due to the trade war stuff or dynamics of trade and the whole Greenland situation. And I mean, you can see it clear as day. It's in the gold price, right? Gold is launching higher here in response to this. Dollar index, yeah, after today, you might see this thing start to flip a little bit more bearish due to the technical side of things. But we have, in terms of inflation statistics, we have a little bit of a mixed perception on inflation. We have economic growth that is a little bit mixed, but I think that when we're looking at the US dollar from a technical perspective, you have just such a messy chart. This is the issue with it, right? Look at the weekly. We don't have the sort of trend that we saw in, we had this uptrend and then this very clear downtrend. On a weekly time frame, you had some trends there. Now you just have this really consolidation heavy dollar index. So I don't know. I'm not, really keen on taking a position one way or the other in the dollar index. I'd like to see some breakouts. I'd like to see some momentum form. And I'm curious from the short-term perspective, if you can break through this 98.80 level, what that could mean. Maybe we're headed back down towards these lows and perhaps even taking out those lows back towards those, multi-month consolidation lows. We've been stuck in a range for, oh my gosh, I don't even know, back a year and a half or well, not a full year, but yeah. 10 months or so, whatever. We will see. Look at this. Silver is taking a back seat to gold here today. That is really interesting to me. US oil is up on the day. Bitcoin completely lost control of that support zone. We were talking about this. I don't think Edgefinder has a bullish rating on Bitcoin, but let me just take a look at it. If I take a look at Bitcoin, no, it doesn't. Bitcoin's getting a neutral score. So technicals were looking good, but after this latest sell-off, you're probably going to start seeing that trend flip a little bit more into the bearish territory. So nothing there for me on Bitcoin. I was really hopeful that the crypto crowd would get something going here, that we would see this push. We just didn't quite get it. And that makes sense, right? You have risk assets across the board, currencies, commodities, more risk on exposed assets are down today. And one thing we got to talk about is the Nikkei, right? So somebody mentioned in the chat, because they may have been watching and paying attention to the idea that I have been interested in potentially buying the Nikkei. Did some research last night on the Nikkei. Do I want to buy it? And the answer is kind of yeah. I do kind of want to buy the Nikkei. Here's why. The Japanese yen is falling hard and still looks pretty bearish to me. So let's go take a look at the Japanese situation and decipher, do we want to be selling yen? Do we want to be selling buying Japanese stocks? What's the situation? One of the big stories for me with Japan is the debt to GDP of Japan is terrifying. It's like 220%. So the debt is massively larger and growing faster than the economic output of Japan. Now, it's not just Japan that's in this circumstance, but it's especially scary for Japan because of the level of debt that their country is in. So when I look at Japan, it's it's nerve-wracking. Look at the 30-year yield, guys. Something is breaking here. Something is not okay. This is problematic. It's problematic on multiple fronts. What this is telling you is long-term interest rates in Japan are skyrocketing. They're jumping dramatically. Why? And why is that happening at the same time as the Japanese dollar chart here is falling? The yen versus the dollar is trending lower. Meanwhile, yields are skyrocketing, aka bonds are selling off in Japan. Japanese bonds selling off. People liquidating Japanese bonds, not interested in buying them. Meanwhile, the yen is dropping. The reason is because it seems like it's a flight, a runaway from the Japanese, sell Japan kind of situation, or run away from Japanese debt, because of what we just said. The Japanese national debt is ginormous relative to GDP, and this is very, very problematic in the sense that the solution that many people think the Japanese should do is to hike interest rates aggressively to try and get their currency under control, because the Japanese yen is getting smoked against all of the other majors. Look at Euro yen trending higher, pound yen, CAD yen, Aussie yen. The yen is in trouble. And so what are we doing here? What's going on with the yen, and what does this mean? Well, it's bullish gold. It's concerning, though, if the Japanese do start to do some sort of intervention. And we're not that far away from levels where they have triggered intervention in the past, around 160. What is intervention? Well, basically, the Bank of Japan aggressively supports their currency by buying their own bonds, et cetera, to try and get the yields under control. Well, this jump is alarming because I think there's somebody correct me, but I believe it's the prime minister is calling for a snap vote, changing things up, and dramatically causing yields to go higher in response to that nervousness around fiscal spending, right? Basically, printing more yen, essentially. And so people are worried about this runaway situation where they think, debt's going to spiral out of control. And meanwhile, the Nikkei has been up dramatically during the same time. And by the way, the Japanese stock market is also up in dollar terms. So the Japanese stock market's doing really well despite the fiscal freakout situation that seems to be going on. Why? Well, all this flooded spending is making people believe that the Japanese yen's just going to keep getting weaker and weaker and weaker. And that is very good for the companies within Japan that are the big corporations. Toyota, right? Cheaper yen means that they can build and sell their products abroad. They can export their goods into the rest of the world and make really good profit margins because they're, building stuff, spending money in yen, which is really cheap, and then export their goods and get paid top dollar in other currencies. So you see what I'm saying? They're doing well. But it's also just the expectation that the government in Japan is super pro growth right now. And that's also very good. It's not going to get in the way of them earning massive profits. So that's sort of like the perception that I understand about the Japanese situation. So in some ways, I do like the idea of buying the dip here and staying strong on Japanese equities, which seem to benefit from the cheaper currency. So anyways, yes, I'm looking to, I'm still yen bearish, at least for now. I think that they probably will try and do something intervention-wise. I don't necessarily think it's time to buy the, currencies against the yen at this level. But pullbacks, if you were to get sharp drops, I would be a seller of yen on weakness. And last thing I'll say before we toss the show over to our next show host, Alan Perez, we could just take a look at some yen pairs for just a second. And I'm looking at things like NZD JPY, CAD JPY. These look kind of interesting. I'm also curious about Aussie yen. So if we take a look at just real quick, NZD JPY, what would I be looking for? Well, support levels getting hit and a little bit of a cool off in this, shoot to the upside. If you had a couple days down, a little bit of maybe an intervention move, these levels start to look attractive for me to potentially go short yen, going long things like NZD. I also continue to like Japanese equities. So I like the trade. I like, I think they've got themselves in a situation right now. The Japanese situation is pretty alarming in terms of the currency. And I don't really see a situation right now where the Japanese yen gets really strong. Unless, and this would be the trigger, this is the trigger where I would reverse this script. If the Bank of Japan comes out swinging and has to get aggressive and they start hiking rates and they start issuing more hikes and they kind of do what they kind of need to do, in my opinion, to save their currency, but seem unwilling to do. Until that happens, I think sell yen is an easier trade. And again, when I say sell yen, I'm telling you I'm waiting for pullbacks. I'm also, putting stops on that idea in case it goes wrong. I'm aware that it could kind of get eradicated to the downside if they come in strong in the opposite direction. If they come in with the idea that we're going to hike rates, then we have to adapt. But for now, weakness in these pairs, weakness in the Nikkei is dip buying opportunities in my personal trading and in my personal view. I hope that makes sense. We went real heavy on the Japanese side of things today. If you're enjoying the show, give me a thumbs up button on the stream down below. And also, real quick before I go, last thing, we're doing a membership sale right now. We just kicked it off here this morning. All VIP memberships. If you want to come trade with me and the team, everything on our VIP memberships is currently 40% off. So if you want access to our trade alerts, if you want to get signals every time I take a position, any new trade that I take, any updates to my existing position, if you want to get notified when I take those trades, you can do so by joining our VIP group. If you have questions about this, we'll drop the link here. Boom, there it is. 40% off sale is happening now. Send a team member a message about the sale using this link that you see in the live stream chat as we speak. Let them know you're watching the stream. They'll get you 40% off the VIP group for a very limited time. That goes for monthly memberships, yearly memberships, or the lifetime membership. If you want to join us, highly worth it if you are looking to take your trading seriously. And if you like my style, if you like, learning macro, if you like trading with myself and Marco and et cetera, the people inside of the group, then consider joining us there. And of course, Alan as well. So up next, Alan Perez is taking over the stream. We'll be right back just after this.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Everyone, how's everyone doing? Hello, Bashi, mi mejor amigo. You say, this translates to he has missed me here, but I don't know what you're missing, man. I've been on, except for yesterday, but what a good thing to wake up to today. The markets are being crazy. I know you guys were talking about the dollar Swiss and how I was gonna, navigate that. I actually got stopped out, so I was trading my stops here. But we are, it's crazy, right? Because the market's really caring about these Trump tariffs and the things that can happen. And the caveat to that, in my opinion, is that the Supreme Court ruling is still not solidified yet, right? They could be deemed illegal or whatever. So that's kind of like the kicker there. So. And we are expecting that news to come out, I believe, today. Today, it's tentative, right? So before it's been pushed back further and further and further. So perhaps, markets are really volatile ahead of that. I'll be very interested to see on what happens. And that's actually good because one was saying, what is Ali going to do? The fundamentals still look strong for the Swiss. However, the Swiss is just very strong at the moment. And if you just look at the relative strength here, the Swiss here is in brown. It's been at the top today, right? This whole risk off move, dollar Swiss really took a hit there. So if I were looking at this with a fresh pair of eyes, which I am, I'm kind of conflicted, guys, because if you get a very risk off environment here, then that in the short term does kind of overweigh the fundamentals, right? Because obviously markets are fearful, but then you get these very sharp reactions right after that once things settle. So perhaps if this thing actually breaks below here, maybe I can go ahead and short. If you look left, there's really no guidance to reference as to how deep we go. But if you go down into the 1 week time frame, then you can kind of see you got some ways to go here. But like I said, right, you get these risk off moves, and look at this snap. We're like, this is the territory that we're in right now, right? We can all see this. If you see this like little red horizontal line stretch across the screen, but then you get like these sharp moves down and then a pop back up, right? So that recovery there tends to happen pretty quickly. So I think I'm more biased towards the long side, especially because the fundamentals have been looking pretty good for the dollar. If we go up to the economic heat map here for the U.S., like these are the recent ones. Retail sales did well. CPI, kind of neutral here. The most recent one, and then I know jobless claims, which is a big one. Although it's a weekly thing and it's somewhat volatile, but 4 straight good prints in a row. NFP did miss last time, but then we got the unemployment rate, which actually ticked in our favor. So that was kind of what gave the dollar some momentum there. So the fundamentals behind the dollar looks pretty well. It's just this tariff story, right? That we got to get through, and that can definitely override what's going on in the near term. But I don't know, man. Like we're in really good prices. Like I could be in the same mindset. Like even if I were to do something like this, long position, this is really good risk reward ratio because I just got to put the stops below this level right here, this floor that we've seen. and then just target like that 200-day or even the top channel right there, and that's a 2% or what 2 to 1 risk, right? I would want to wait for the Supreme Court tariffs, and that's going to happen supposedly very shortly here. So in about 20 minutes or so, if it does come out. So we'll see how that plays out. But definitely a good risk reward. And like you guys say, the fundamentals really looks really clean. And if you look at the top setups page, actually, look, dollar Swiss is at the top at the moment. It's getting that bullish trend, seasonality, all that good stuff. And like I said, the fundamentals for the US have been coming out pretty strong here. So that what kind of keeps me hopeful for dollar Swiss longs. But let's see what you guys are saying in the chat. You guys want to look at some pound New Zealand, brown, fresh pair of eyes. Thank you, Color Bryant. Yes. Risk off, but dollar is weak. VIX keeps going higher. So yeah, when in environments like this, and the VIX was actually a lot higher. It was like 8% earlier. Now we're starting to kind of see some kind of a fade, if you will. It's kind of too early to tell, right, to make that claim. But yes, whenever we do get that risk on environment, the Swiss franc, that's the role that it plays, right? Safe currency, but it definitely plays that role there. So we'll see how it turns out there. Maybe mid-year dollar strength. Yeah, I mean, the fundamentals look pretty solid. If you continue to see that path, then of course, the only thing is the thing about the tariffs, which it's more of a retaliation thing, and the relationships that we're kind of messing with. Because if you think about earlier January of last year in the beginning, when we are doing the tariffs on China, Canada, Mexico, dollar actually really much appreciated on top of that. So it's somewhat of a different story here this time, but definitely something we have to keep a look at here. Someone said USD CHF to 86.5. Let's see what that looks like. 86.5. Oh wow, that's pretty up there, man. If you're right on the money, I'd buy that thing now. But no, not financial advice. That's just hypothetical there. I like the VIX in the high 20s. You said it went away for some news that comes in 20 minutes. It's not necessarily like economic news or anything like that, but supposedly the U.S. tariffs are supposed to be announced here. They are tentative though, so the last 3 times they've kind of pushed it off there. So that's kind of what I mentioned there. Can we take a look at euro US dollar? Of course. So one thing with the euro dollar that I found interesting there, if we do continue to see like this dollar bearishness trade, I've missed the trade though, but like a good way to go about it was look at this. The yellow line is a 200-day moving average, and we bounced right off of that thing, right? So we haven't continued the uptrend, right? Because we still have to breach these highs here, these recent ones, and perhaps, like I said, the news today, if it rules in favor of tariffs or against in favor of tariffs, it's going to definitely move markets there. And if we get like a very bearish or a strong wick on this candle here, that's actually pretty bullish for the euro and very strong for the dollar. And then I could participate in long dollar Swiss or long or short euro dollar, right? Because I pretty much washed out of my trades here. So that'd be something very interesting to watch for. But if you do get a decisive close above this candle here, then dollar bearishness is in play, and I'd actually be looking to seek for something like the Aussie dollar. So frustrating because I've been so adamant about this call, and the patience really hasn't been working out in my favor. But I've mentioned this many times here. I'm trying to go long Aussie dollar, and it just keeps going away from me. It's like every time I'm like, this is probably a support level, it just goes higher and higher. But ultimately, I'm waiting for this 50-day moving average. So if somehow we can get here, I'd be willing to participate, of course, if the fundamentals line up. But I missed it, man. I keep missing it. Hey, Margot.
Hello. Can you hear me?
Yes, I can.
Awesome. So how are you? What are you up to? What are you watching?
Yeah, so I was trailing my stops here, and this risk off move really got me out there, which is good. I think I take it as a good thing because I can actually start looking at other things and being more open to both sides of the coin, right? Especially with this tariff tentative here. One thing that I've noticed here is obviously we have this rotation trade coming out of the NASDAQ into other broader sectors of the market. And I don't know about you, Marco, but do you pay attention for equities and these like longer term assets that tend to drift up? Do you use moving averages at all for like support or for guidance?
So I do look at the 200 EMA or MA in some cases, but mostly I rely on the 20 EMA to catch an entry around the 20 EMA. But right now on the NASDAQ, so let me just show you on the NAS. I don't really see massive strength, so I don't really see a massive uptrend, and we are below the 20 EMA, which doesn't really make me super confident to get in. And overall, the price seems to be a bit flat. So there's a definite difference between this price action and the one we saw right here with the pretty steady uptrend. So I would be patient. I would wait out the NASDAQ. I would like to see all-time highs, preferably. Looks like we definitely had a bit of a triangle, but we have broken lower out of the triangle. So if we break, if we break 25K and close below it, I mean, we already broke 25K, but if we close below it, I think we could see some more selling. So short-term bearish on the US stock market. What about you? Are you actually looking to buy the dip here?
I wouldn't say buy the dip. Very interesting that you have that chart there, though. Here, I'm gonna share my screen. There you go. I didn't look at the NASDAQ through that lens that you had that triangle formation, but you can't argue that. That's a strong technical read there. And of course, everyone watching, technicals are subjective to the individual. Like Marco said, he uses the 20. I'm kind of looking at the 50-day. Okay. And I'm looking at the S&P 500. We're kind of testing up this level here. And so in my opinion, if you get like a decisive break below, then perhaps we get that, opportunity for a deeper pullback. And in that case, I would actually be willing to go ahead and buy something. Especially if this tariff, the tension continues to stay pretty elevated. I would actually like that. And I think it's somewhat probable that we do get a correction. And if we do get one, I hope it's a strong one. Because if you look at the put to call ratio, if you look at the one for the S&P, it's actually very skewed bullish right now. So give me a sec.
I think it's in crowd sentiment. So just above
crowd sentiment, put to call. This is put to call radio for the S&P 500. High call volume. People are very, very bullish here on the S&P. So we all know how that happens. If we look at retail sentiment, I'm just curious. I haven't looked at this before. Where's S&P at? Yeah, 90% of the crowd is bullish here. 90% of the retail crowd is bullish here on the S&P. So we are getting a very favorable direction bias from the retail crowd in favor of longs. And so if we do kind of break this technical level, I could say that perhaps we do get some kind of a very sharp correction, just because everyone seems to be pouted in one direction. And then if we, monitor the VIX and look at the put to call ratio, and once it gets to the other side, very bearish skewed, that's when you get those really good opportunities. Like if you look at right here, this was one right here as well. Yeah. This was another. So that's kind of what I'm looking at. And as far as the technical floor, I'm just looking left here. Previously, that 6550 level would be somewhere where I'd be interested to go ahead and pick it up. And if you look at the 200-day, like we all mentioned, like we both agree, maybe by the time we dip here, this 200-day is actually getting closer and closer to this level. So we'll see.
Yeah, and also the AAII investor survey, that's printing pretty bullish, which means a bit of a correction is coming. I think Nick heavily talked about this, but if you go to sentiment crowd AAII, you can see that the blue bar is pretty high up there. So in the last, let's do the last 4 years. Okay, so let's do 2025. Basically, we can see that it has been sort of the most bullish reading in the last few prints, which is not a good sign, which means possibly a bit of a correction is coming. And also, if we go to data scanners, but it is under... So I forgot where it's located here, I think. Scenario backtests.
Mm-hmm.
And if we go to the AAII investor survey, if I can just find it here. Here. So bullish sentiment is above 45%. And then we look at what happens in the next 6 to 12 months. The returns are not that great. So basically, when the survey is above 45%, we tend to get some, let's say, bad performance from the S&P in the upcoming, not bad performance, but not like 10, 15% up months, basically, or up years. So if we go back to the AAII, it's now, I think, 49.5%. So that's definitely above 45%. And so I wanted to ask you, what do you think about the ruling from about the tariffs? Is that going to happen this week, or it keeps getting delayed?
It's supposed to happen today in about 9 minutes here from Financial Juice. But of course, it's tentative, right? So we'll see how that plays out. And so that's why, to everyone watching here, it seems like, markets are setting up for a direction, right? One way or another, which is exciting. And I think if we just play the patient game and seek, because I personally don't know how the market's going to actually dissect all of this, right? If I did, I wish I could tell you, but I don't. I don't know if it's going to be very risk on, risk off. I don't know what the verdict is going to be as well. So I'm actually going to be waiting for some guidance on that. And depending on which way it goes and how market dissects everything, then markets are going to move. And I'm in a position now where I'm pretty flat and I can actually partake if something really pops up here. So that's kind of like the thought process where I'm at right now. And I'm just kind of open-minded really to anything.
Did you say 9 minutes or 9 hours?
9 minutes. It says on Financial Juice here.
9 minutes.
Pull it up.
Okay, so we're gonna get it in. Maybe gonna get it in the next 10 to 15 minutes.
Maybe.
Yeah, last time it got delayed.
So here it is, Supreme Court tariffs. This was today.
Okay.
Tentative. Okay. There we go.
Tentative. Okay.
Well, we'll see.
And do you think it's gonna be or there is a taco trade opportunity? Like
there could be a taco trade opportunity. Yes. It seems like we get one once a quarter, so perhaps we can do that.
Yeah, I'm looking at. I'm looking at mainly the stock market. If I'm being honest, I just don't like these. I don't like the price action. Like if the Nasdaq was in a massive uptrend and then we had this happen, it would have been, of course, a perfect scenario. With just a massive drop, buy the dip, Trump chickens out, and then we continue going higher. So that's like the perfect scenario. But at this point in price and with all of the crowd sentiment that we have, I'm just not convinced. I'm not convinced. And also, I wanted to ask you something I do like is USD Swiss. So we talked about a potential price floor here, and we talked about this support level. We are now pretty close to the support level. I know you were in the position, you're probably trailed out by now, but are you looking to re-enter? Because I'm actually looking to get in this one. If we maybe go a bit lower and then have a bullish candle on the daily chart, I think that could be a good opportunity.
Yeah, so someone mentioned earlier, what am I doing with dollar Swiss, because I was in the position, and yes, I got trailed out here. And we are back at this level somewhat, right? We're near the bottom end of the channel. And the fundamentals at the moment, if you just look at them face value, ignoring the tariff sentiment that we have, it is actually bullish for the dollar, right? And top setups is showing that as well. So we have the tools kind of guiding us in that direction. In my opinion, if we do get somewhat of a tariff theme that goes against the dollar and is like sell America type thing, then dollar Swiss is just going to rip below this floor here. And then, if you just look left, you have open room like this, right? It can get very sharp very fast.
Yeah.
I like the risk reward ratio. And to be honest with you, if we get some price action, if I flip down like to a lower time frame, like a 1 hour or something, and we're kind of seeing it, but I want to see more of a decisive If we get some kind of a V-shaped bottom, then I'd definitely, go ahead and hop in that thing, and I'd
Mhm.
probably put some size behind it as well, if I'm being honest with you, because I don't mind going in there somewhat late, but going with the flow, right? If we get a V-shaped bottom, and technically we're retracing the move, this recent bearish move, and the fundamentals still look pretty good in our favor, I'd actually put some money behind that, and target like the 200-day at least, or the top end of the channel. And then if we get the dollar theme continuing to go ahead and support the dollar, then perhaps we like get out of this ugly channel. This has, I mean, this sucks, right? Like, if you think about it, we've been in here for 200 days now.
Yeah.
And perhaps if
That's
you
a
look at
long
this
time.
from a higher scope here, perhaps this is like, you had this down move here, and then we're finally creeping out of here, and now we can start drifting another way. The next level of support or resistance, I would say, someone mentioned this in the chat as well, but this is one that I have, this was once, 2, 3 here, so perhaps we can go ahead and
Mhm.
get up into this level here. That would be fantastic, especially if I put some size in down here, right? Then I would be all for it. That'd be awesome. But that's kind of how I'm playing the Swiss. I'm scared though. I'm scared because if you just look at relative strength wise here, the Swiss is really taking the lead against everybody. We're starting to see that kind of fade off a bit here, but like, when I woke up this morning, I saw dollar Swiss down like 0.9%, almost 1%. So that was
Yep.
definitely like, yeah, if this thing decides to go in that direction, it will go in that direction pretty fast.
Yeah, yeah. But I do like just a quick play, maybe buying the bottom of the range, selling at the top. It doesn't even have to continue going higher, but as you mentioned, the fundamentals should be bullish for USD Swiss. So just as I mentioned, buying the bottom and selling at the top. Let me quickly see what does the edge finder say.
Yeah, I was gonna go over or take a glance at the eco surprise meter to see if the Swiss is still getting beat up, because it was, 0% on the economic surprise meter here for the U.S. and U.S. dollar is actually getting let me go ahead and do this, getting a bump here. So before, if we all remember, USD was like in the 40 and then 45, and now we're at 58. Whereas the Swiss here was very strong at one point as well, and now it's at 0% here. So, and this is for recent things going on, right? Recent releases. This is a more shorter term time horizon kind of thing that we're looking at.
Mm-hmm. I really like this. Yeah, most likely I'm gonna do some work after my segment, but most likely I'll try to get in at this level, because it's just Trump being Trump. It's just tariffs, market sells off, America, kind of everyone goes out of America, but then pretty much things go back to normal after maybe a few days or a few weeks, when Trump eventually walks back on his word. So I think that's one of the better setups in the markets at the moment. And I did cancel my USD JPY plan. So I was looking for possible intervention at 159, but I canceled it because we were getting some dollar weakness, and price seems to pull back a bit. So in my opinion, if you're looking for an intervention, you want to see that quick price action, quick moves into that level. But if we start climbing back above 160, I think it's game on again, and I think that's going to be a good area to try to build a short position. So maybe you have a take on this as well.
Yeah, like you said, the recent decline in the dollar really slowed this trend down here, so it kind of makes it not as prevalent for them to go ahead and intervene. And I actually saw this too, Financial Juice this morning. Someone from the Bank of Japan.
Awesome. Let's see it.
Yeah, it says we want markets to calm down. So, and I've said this before, they're very mindful of the situation and how the effect can happen if they just hike interest rates really fast, which is fantastic. But they have said that we want markets to calm down, and with the dollar kind of slowing down as well, this upward trend kind of goes against what they said, which in the past we only intervene to very fast appreciation. So it's no longer fast in this case. What are your thoughts on the Nikkei? I know Nick's looking to go long here. I was listening to his segment.
Okay.
I haven't pulled up the chart here, but I did see Edge Finder here is getting a bullish reading on that. So if we can just take a look, glance at that, Nikkei bullish reading here, 5 score. So we'll see how that plays out. I did notice that, and this is not even just for Japan, but if you look at the this is the 2-year yield, but like look at the 30-year in the US and the 10-year yield here on the dollar. Markets are requesting higher premium because obviously the risk behind that. And if you look at the yen, this is the 10-year, right? But I know the 30-year
look at the 30
even crazier.
30 is going crazy.
So yeah, like what are your thoughts on the Nikkei? I'm staying out of it just because it's not my cup of tea there. But technically speaking, this is the CFD chart. We're getting a pullback here, and that actually might be a good opportunity for someone that is willing to partake, especially when you're getting that bullish reading on the edge finder, and we're at that 50-day moving average, which is something I look at technically. But what are your thoughts on that?
Yeah, very interesting with the Nikkei. I mean, it's all about it's not all about the BOJ, but it's at least a little bit about the BOJ, and they keep doing interest rate hikes. But the hikes are not doing much when it comes to the actual rates. So if we jump onto the edge finder and we look at the real yield, now let me just remember where the real yield is located, because things have changed around with the edge finder. So I think it's under, let me just close these windows. So maybe fundamental, it's not the carry trade scanner, but it's not the heat maps. It's economic data, interest rates, and I think it's here. Yeah, okay. So the real yield in Japan is still negative, minus 2.15%. So they are raising the interest rate, but not by much. It's just gradual hikes. And this week we actually have a planned meeting where they most likely won't even hike. So the market is not taking them seriously, and it's interpreting the whole event as being pretty dovish, which then we're getting some inflation concerns in Japan, but also the Nikkei benefits from a dovish stance. The new PM in Japan, very dovish.
The more fiscal spending, the higher Nikkei, weaker yen. Yeah,
absolutely.
And that's more of a long-term theme as well, I would say.
Yeah, I think so too. And this is a good price to enter right here. So I would say Nick is definitely onto something. And I'm going to look at this after my segment, see if maybe I can too get in on a buy position. I mean, we have a good convergence with the support level right there, and then the 20 MA. This is the 20 MA on the daily chart that I was referring to. The only sort of downside of the Nikkei is I cannot trade it on all of my accounts. So some of my accounts or some of the brokers offer the Nikkei, some of them don't. On some brokers, it's super expensive to trade the Nikkei. Do you have like a broker that's going to give you good, let's say, conditions and small swaps where you can execute a buy position?
Not that I know of, especially for foreign. I mean, if I were to trade it, I think there's an ETF I can go about it. This would be more the cost-effective route, but it's not something I'm going to trade. But now that we are verbalizing it, it makes a lot of sense, right? You have there you go, EWJ, Takaishi and everything, the fiscal spending in favor of the Nikkei. And like you said, the Bank of Japan hiking rates is a real thing, but they're only looking to hike once more, right? And then the intervention as well. It's not like I said this before, but it's like putting a Band-Aid on a gunshot wound, right? You really need a lot of things in favor to make that intervention worthwhile, or else that move is just going to be a one-off thing, and then the thing keeps drifting higher as far as dollar yen. But yeah. I'll leave you guys, or I'll leave you to it, Marco. I know I'm extending into your segment here.
No worries.
I just want to say, I love these conversations. They're fantastic. And by the way, haven't seen anything about the tariff verdict here, so still up in the air. Perhaps we just move that, a couple of days past. But I will say, join the Telegram, everyone. I'm about to make the article post. I had a late start till the morning, but definitely join. It's free value, and they're actually doing a giveaway for the signals, so you can actually trade. Use Marco's trade signals and Nick's and Ivan's and everyone else in there. So fantastic. I'll leave the Telegram link in there. I did a double take, my bad. But have a blessed rest of your day, guys. And as always, trade safely. And Marco, have a good one, man.
Thank you. See you. Goodbye.
All right. Bye-bye.
So let's continue with my solo segment. Thank you very much to Alan for talking about USD Swiss in the last couple of streams, because I think this is a really good trade idea. The more I look at this, the better it looks. Now, it's important to, of course, be right in terms of timing. So I'm still considering whether I should wait for a blue daily candle, but maybe that's going to be a bit too slow. So maybe it's just good to get in with a market order position. You know, this level has been heavily defended. Edge Finder is producing a bullish reading. So this is basically, or you could execute a potential taco trade on USD Swiss. This is sell America, but sell America can quickly turn to Trump walking back on his word, and it becomes buy America. By the way, I'm doing a DNA funded account giveaway today. So in like 5 to 10 minutes, I'll be giving out the code to get a free challenge. So make sure you stay tuned to the stream. Continuing with what I have on the watch list. So I have three things basically. I have the pound Aussie, which is trying. You know, we're trying to push lower. We're trying to break out into new lows, but we just cannot get the power needed. So I do have an alert set. We keep on breaking it and leaving wicks. Not the most ideal position or not the most ideal price action, but I'm still looking at this. So if we can get a nice big red candle with a clean close on the bottom, I think that would be pretty high probability to look for a sell setup. So what I would then look for is, again, a big red candle, preferably closes below the support level. That's kind of the key with this whole thing. And then a bit of a pullback to, let's say, the 20 MA. So pullback to the 20 MA, and then I go in and get a sell position. So that's the game plan. Now, just in general, the markets today seem to be moving. So we're getting at least some movement. If you're a trader, no matter if we're moving up or down, you can make percentage. The only thing we need as traders is volatility. So finally, some volatility is starting to come into the markets. We're starting to get some trends. Hopefully, or very likely that we can execute some positions and get some percentage. And that's good to see. We're actually getting something. Then we have gold. So pound Aussie, USD Swiss, I already mentioned quite a lot, so I'm not going to go into it again. But gold is another thing. Again, gold, extremely strong today. Just gold loves this risk-off environment, loves the drama, loves the tariffs, Greenland, Venezuela, Russian oil tankers, Iran. You know, we started 2026 with quite a lot of drama. Unfortunately, the sport is that the more drama you get, the more moves you get in the market. So it's basically trading is in some way a blood sport. You benefit if there's a crisis in the world. So gold flying higher. I definitely want to buy it, but I do want to get, let's see, we're getting a disclaimer from StreamYard, but I think James can look into this. Okay. So we're still doing well on YouTube and Twitter, but looks like Telegram may be lagging a bit. Anyways, so for gold, I'm looking for a bit of a pullback to the 20 EMA. Okay, to the 20 EMA. I don't want to buy the all-time highs, I don't want to buy the all-time highs. I want to get in on a pullback. What does the Edge Finder say? Gold, bullish, silver, neutral. I'm still pretty consistent when it comes to my silver view, which is that I think silver is overextended. Silver looks parabolic. And I think silver is not the best play at the moment, or hasn't been the best play ever since the 29th of December. I may be wrong. I'm already wrong, but doesn't really matter because my focus is on gold. The gold and silver, they should move in tandem. And especially gold should benefit the most when it comes to a risk-off environment. So those are the things on my watch list. When it comes to the US stock market, we're pretty much red. You know, risk-off continuing. Even the DAX. The DAX was something that I was watching. I'm not watching any longer. So I don't like this sell-off. It's really not a controlled sell-off. It's more like a V reversal. And a V reversal or an inverse V reversal is definitely not a bullish pattern. So this is your V reversal, and that's your inverse V reversal. So not great to see such a massive sell-off. We broke that 20 MA and crushed lower, so I don't like it any longer. The Nikkei though, very interesting. So the Nikkei looks pretty interesting right there. Let's see, Nikkei. Bullish reading on the edge finder. As Alan mentioned, Nick is most likely looking to get in. Let me see if there's already been a signal from Nick. So let's take a look. I think there has. Yeah, so Nick just bought the Nikkei. I think that's a pretty good trade idea. I'm not looking to do the same at the moment, but I'll definitely do some research, see if I can price in a trade here. This does look good, definitely does look good. And I need to see which one of my accounts can actually do this sort of a trade, because again, some of these accounts, they don't even have the Nikkei as a tradable asset. And on some accounts, it's just too expensive to trade it in terms of the swaps and the fees and this and that and blah, blah, blah. So yeah, stop loss of maybe 2.3%, aiming for the all-time highs as the initial take profit. I think that looks pretty good. Let's see what Nick did. So let me jump onto the Discord. Yeah, that's kind of what he has in mind as well. By the way, if you want to get signals, definitely consider joining the A1 Trading Discord. There will be a link in the description of the stream. And with the discount code Marco, you can, not Maro, but Marco, you can get 25% off. Okay, so 25% off with this code. Discord link is in the description. That's one of my top indices at the moment. Definitely actually the best indice right now. The S&P just looks a bit corrective, bearish. NASDAQ looks even worse, looks flat and bearish right now. So Nikkei is the absolute winner of the indices race. When it comes to the metals market, so silver I mentioned looks parabolic. I don't want to participate. Platinum going higher, but possibly going to get stuck at this resistance level. Copper not doing much. Crypto is not benefiting this environment. So from this environment. So crypto just cannot seem to catch a break. By the way, if you have forgot, I've been mentioning it for a while now, but we are now in the bearish part of the halving cycle for crypto, which again is playing out. We're getting sell-offs on the crypto market. So Bitcoin, what I'm looking to see is, of course, I'm looking to see a break above 100K. That is a clear support level. That is a very powerful support level. And we also have a pretty important trend line, right? We have a trend line going through these couple of points. So that's a big area where a lot of prices converge. Okay. So that's about it for Bitcoin. I don't want to touch it. Ethereum, same thing. I don't want to touch it until it goes back above 100K. I thought that was going to happen. I thought we were pretty close. So we were getting pretty close to the 100K, but again, a sell-off happened. Looks like the tariffs seem to be bearish crypto. So bullish gold, bearish dollar, but also bearish Bitcoin, which is interesting. That's definitely interesting to see. Makes sense because it's a risk-off play. With a risk-off play, usually Bitcoin loses value because Bitcoin is it's a risky asset. Let's not kid ourselves. So Bitcoin is a risky asset. And now time for the DNA funded giveaway. So let me copy the code. It is going to be a 10K one-phase account. 10K one-phase account. I'm going to paste it into my trading view. So the quickest hands will get the code. So 3, 2, 1. This is it. Again, 10K one-phase account, DNA funded. Go to the DNA funded website. Go to the checkout page and put in this code. You will get the challenge for free. If you did not manage to catch the code, you can use the discount code, which is A1 Live that gets you 25% off any challenge. Okay, 25% off any DNA funded challenge. If you did manage to use the code, please put a comment in the comment section so that we know that the code has been used. This is my personal 50K funded account. It's a big drawdown, so I'm pretty close to losing it. But hey, it's just one account. You know, some accounts you'll manage to get a payout, some accounts you will lose. That's how the game goes. So I've passed phase 1, passed phase 2, now funded stage, and unfortunately in some heavy drawdown. Buy on the S&P, sell on GU. Both trades are not working out as expected, or they aren't really in much profit. By the way, this challenge is purely traded by ChatGPT. So this was a fun experiment. It may come to an end pretty soon, but it was pretty fun nevertheless. And ChatGPT managed to pass phase 1, pass phase 2. DNA funded, great prop firm, had a great experience. Unfortunately, did not have the experience of reaching a payout, but hey, I'm gonna buy a new challenge, so it's all gonna be good. If you wanna get a challenge, 25% off, A1 Live, one of the best firms in the game, and with our discount code, you definitely get the cheapest price when you compare it to other successful prop firms like FTMO, 5%ers, E8 markets. DNA funded is definitely, you get the best price with this code. So that's it for the sponsor segment. Continuing with the live stream. What did I miss? Well, I kind of missed some Forex pairs. It's pretty much going to be dollar. Wish I held my AU position, but you never know when the new drama will hit. So this event, this risk-off event and the tariff event was totally unexpected. So you just have to adjust on the fly, see how the market is doing. UJ, nowhere close or not really close to the intervention level. I'm looking at 160. Let's put on an alert. So 160 is going to be a crucial level. And then we may, or I may, try to play the intervention once again. I think that should be pretty good. So possible intervention level right there, placing a sell limit at 160 or 161 would be even better. So again, I don't have an order in the market just yet, but if that changes, you will be notified in the A1 Trading Discord. Link is in the description. I think I did miss something, and that was oil. Oil prices are volatile, pretty much controlled by geopolitics. Geopolitics have a huge impact on oil prices, especially at the moment. Rising, then we had a big drop when Trump cooled off with the pressure on Iran, and now we're back up, maybe because of some risk-off environment, a bit of a risk-off play. I don't really want to trade oil. It's not on the watch list, and I'm not really interested to execute the position. DXY definitely falling. JXY falling as well overall. So Alan and I commented on the future of the JXY, and also we commented on the bond market in Japan, which is something that is pretty important to monitor. So if you want to take a look at that, you write JP 30 year. And this thing is flying to 4%. So if you are working at the BOJ, this is a bit concerning, because when the bond yields go up, it's usually for one major reason, and that is that people are massively selling the long end of the bond market. So this is not a good thing for Japan. And I'm sure the BOJ would like to see the yields go down, not up. So this is a big problem, and it's a conundrum, and they are not sure, should they raise the interest rate or cut the interest rate? I've been doing quite a lot of reading on the topic, and what some experts say is for the BOJ, it's better to actually raise the interest rate. So to raise the real yield. If you go back to real yield heat map, again, it's economic data, interest rates, real yield heat map. It is better for them to raise the interest rate, JPY, and then have a neutral or maybe even positive real yield, that may bring some money back from the US back into Japan. And that may make the bond market more attractive for investors, and it may drop the yield back down. So this is now a big problem for Japan. It's going to be really interesting to see what they do. I'm going to be closely monitoring the situation. And of course, this all ties into the USD JPY. Although they could do an intervention is just a one-time event. So they could do an intervention like this. Markets drop 3-4%, and then we're back up to all-time highs. Or not all-time highs, but we're back to the previous highs on UJ. Very, very interesting situation in Japan right now. Okay, time for the comment section. So we have quite a lot of comments. Let me see. Let me try to start from my segment from 10 a.m. Okay, let's see. Marco and Alan needs another duo segment. Yeah, Joshua. So if you're wondering when Alan and me will be streaming, you can find it in the A1 live stream schedule. So A1 live stream schedule. If Alan and I are together, that means we have a joint segment. So it's going to be today, or it was today. There's another one on Friday, I believe. Yeah, see, Friday, Alan and Marco. So A1 live stream schedule, this is where you can find us. If you have any chart requests, make sure to put it in the comment section, because I'm losing so much money by shorting euro dollar. Well, if you don't have a clear plan in the markets, why are you shorting the euro dollar? We will do more joint segments, absolutely. So I think these are awesome. I really enjoy them, and we definitely plan on doing more joint segments. Supreme Court doesn't rule on Trump tariffs Tuesday. Yeah, so looks like there has been another delay, basically. So the latest market moving news was the Danish pension fund Akademiker pension to exit US treasuries. But this is it. This is the news. So Supreme Court doesn't rule on Trump tariffs Tuesday, declined to rule. A challenge to his signature economic policy will likely take at least another month to resolve. That's a problem. That's a problem. We definitely wanted to see. We definitely wanted to see a resolution. What is this below? France's foreign minister. France supports the EU Parliament's wish to suspend the EU-US trade deal. Now, what is generally happening, just to give you guys a bit of a briefing on the situation. So Trump is back with the tariffs. The EU already made a deal with the US. Now the deal is off. At least that seems to be the case. The EU still hasn't really retaliated. Two things they were waiting for. The first one being the ruling from the Supreme Court. That is off. So the ruling from the Supreme Court has again been delayed. But the second thing that EU members may be waiting for, they may be waiting for another taco event. So for Trump to walk back on his word. Will that happen? We shall see. But I think they're going to give a few days, maybe even a week or 2 weeks to Trump to think about the situation and basically walk back on his word. If he does not walk back on his word, then maybe a retaliation will happen out of the EU, and we could see gold continuing higher. We could see the DXY going lower. We could see euro dollar. Well, it should go up in theory, and the stock market is going to suffer. Not just the US stock market, but the stock market in Europe as well. Just look at the DAX. I mean, this is the tariff. This is the tariff news, and we just sell off. You know, we open lower and then we keep on selling off. Yeah, very annoying, but part of the game, part of the markets. We need Trump to leak the verdict like he did on the jobs data. Yeah. So my advice, or Alan's advice, is to closely follow Truth Social, because maybe Trump puts in a post or a tweet about the ruling. So, Marco, what is your opinion on the RSI indicator? I don't really use it. I think most indicators don't offer you a massive insight into the market. They could be a small added confluence to buy or sell something, but I wouldn't rely on an indicator to buy or sell an asset. So as a small confluence, yes, but as the major part of my trading decision making, no. Hello, Sluggy. Ruling is February 20th, 4-week recess, and then they may delay it once again. So yeah, it's a joke. It's a joke. Welcome to America. It's not just America, you know, it's every country in the world. Every country has its issues. Let's milk every country of money, then say it's illegal to show that we care about the law. I lost as soon as the code popped up on screen, lagged out of nowhere. So let's see, did anyone catch the code? Let me see. I may have given you the wrong code. Sorry about that. So I got my codes mixed up. I forgot to write down that I already used the code yesterday or gave out the code yesterday. So here is a new code. I have a new code for you. Again, 10K, one phase account. 3, 2, 1. Here it is. That's the code for today. I got my days and codes mixed up. Sorry about that. I do have more codes to give away, so don't go anywhere, because for the rest of this week, I'll be giving out more challenges. Again, this is a 10K, one phase account, DNA funded. DNA funded. Check it out. If you want to get funded with DNA, we also have a discount code, which is A1 Live, and it gets you 25% off just for you guys watching the streams. So let's see if this code is going to work. Marco, is there any 25K codes? I do have one more. So I have a couple more 10K codes, and I do have one more 25K codes, but I'm leaving the 25K one last. So I'm leaving that one for as the last code to wrap things up. So if anyone did use this code, just put it in the... It's not working again. Should be working. I'm not going to give away a new one. So this is the code for today. It does not exist. You're not going to trick me into giving out a new code. Aussie CAD, New Zealand Swiss. Let's take a look. So Aussie CAD, New Zealand Swiss. Just see. Aussie CAD. Let's take a look. Top setups. I always like to run things through the Edge Finder. So Aussie CAD, neutral reading, which is not a good sign. It does look pretty bullish. I'm bullish on the Aussie. On the CAD, I don't really have an opinion. I'm pretty uncertain as far as the CAD goes. We're getting some good data, then we have some bad data, so it's mixed. It's mixed data all around. Not my favorite thing to trade. If you do want to buy it, I would say be really careful of this high. It is a clear resistance level, so be careful what you do, because this could be the place where we reject with a lot of force. So Aussie CAD, not my favorite thing in the world. The next one was NZD Swiss. Yes, let's take a look. NZD CHF. This could be a bit better. Could be a bit better. I would say, let's take a look at the top setups. NZD CHF. Very bullish reading. That's nice. Now, that's something I do like to see. Could be the start of an uptrend. Yes. When did we start to wake up? Kind of on the 26th of November. That's okay. So this is not that bad. Not something I'm looking at because I don't have a clear view on the New Zealand dollar. And for the Swiss, I would much rather play the USD Swiss. But this is not such a bad position to get in on a buy setup. Let me see the Let me see the economic heat maps. So New Zealand one, let's take a look. Okay, so pretty bullish. What about the Swiss? Pretty bearish. That's good. I like that. So this is a fine position. Not for me, but it looks okay. That's about it for my segment. Thank you very much for watching. Don't go anywhere because we have Tiger Berry coming on after me. So I also have more codes to give away. Join me tomorrow. Join me on Thursday and Friday as well, and you will get some more free challenges. So thank you for watching and see you in the next live stream.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Well, hello, everybody. How's everybody doing today? Got Tiger on here to close the show out for the day, the last half an hour. And going to definitely go through some things. I got a little sticky note here of some items to talk about. But as always, if you guys have any chart tickers, anything you want specifically looked at, do let me know. And I'll try my best to fit as much in as possible. Just kind of a recap for me over the last, I would say, month or so. I've been on a pretty good winning streak. The end of November was my last red week until last week. So I had a red week last week. So, you know, anytime I have a red week, I like to try to kind of just go back to the basics and make sure I'm not breaking any rules, which usually is what happens when I have a red week. I'd go through quite an extensive supply and demand zone structure whenever I'm getting into the trades. So obviously it all starts with the Edge Finder as far as looking for my top setups. But then when I move on over to the charts to time my trades, I've got a pretty extensive list. So last week, as I reviewed my trades, broke some rules, right? It's easy for us to get kind of a big head, especially after you have a long win streak. Now I'm in challenge accounts, just so you know, I don't have a cash account. I've got a couple challenge accounts going on, 350K in challenge accounts. So, you know, I treat that like my own money. But even so, it's real easy for us to kind of stray away from our rules at times. So that was me last week, all about going back to the basics this week. So just so far this week, I have just gotten into one trade and I've already closed it out for a small loss. And that was Bitcoin yesterday. I got into that trade because it had dropped into a pretty good set of demand zones from what it looked like in my view. I always start off from a daily time frame. I drop down to a 4-hour and make sure I have a 4-hour demand zone inside of it. Bitcoin has been kind of on a downward trajectory ever since, basically ever since back here in early October. It's just been straight down. So, it's been kind of a time where you wanted to really kind of stay away from the longer term swing trades until you start breaking some highs. So we finally did that. We finally kind of broke through. I was really kind of looking at, let's see if I go to a 4-hour here, it all really started from this momentum leg down back here. And I was just basically waiting for a break of that to the upside. Now these wicks, they didn't really count for me because it wasn't a very strong conviction close above this area. So I was waiting for something a little more with a little more gusto, I like to say. So we kind of got that over here early part of January, and then really over here is where it kind of took off. So my thinking on this at the time, number one, for like a day on the edge finder, we had a bullish score on Bitcoin. It didn't last long. It was like a day. The put to call ratio was given a pretty decent, pretty decent look at it. We can take a quick look at it actually. All this lasted one day. So if I go to crowd sentiment, I go to put to call, along with the 5 or 6, whatever the score was, just looking at Bitcoin, we had a pretty high put volume. Okay. So a lot of bearish bets in the options market. So for that day, it looked pretty good. And as you can see, everything just totally flipped. Well, it makes sense. We've been having the more Trump tariff threats, promises, however you want to look at it, taco trade potential. So that kind of came out over the weekend. And I really didn't dig that deep into that until yesterday. As I was in that's when I decided, you know what, I better get the heck out of this trade, because it did go a 1-to-1 reward risk. If we're taking a look at the zone itself, going back to Bitcoin over here. So I basically, you guys see the yellow box. Okay. That's my daily demand. That's where I always start. Okay. Indecision candle followed by a strong move out, strong leg out. I have to see the volume spread analysis candles growing, and I have to see a gap. Okay. I had all that, broke structure and everything. And then I just dropped down to a 4-hour to try to find that confluence. So drop into a 4-hour. Okay. This was an indecision candle here, where the volume was just real strong for 3 candles. It broke and closed, broke these structures over here to the left. You see, I drew up the gap there. Okay. So I had the gap. I had everything technically that I wanted to see from the chart. But then again, we had all the drama come out over the weekend, a little more of it yesterday. Trump's 10% tariff, possible to go up to 25. The Eurozone kind of retaliating, if you will, with the tariff bazooka as far as the retaliation. All this because of Greenland. I kind of jokingly called it the hostile takeover, right? The U.S. is pretty good at stuff like that. But anyway, all that just threw a dampener and everything. The dollar came down, stocks came down, risk off. Okay. Obviously, Bitcoin is more of a risk asset. So when I got into this trade, it was looking okay. Now, if I actually let's see here. We'll drop down to a 15-minute time frame. So yeah, back over here on Sunday. Sunday, obviously, when the market opens here in the States, the Americas, okay, we kind of broke through that area there, and then I ended up getting into the trade right around this area. Now, if we're just simply measuring the proximal line of the zone, the 4-hour zone, down to the distal line, okay, that's giving us about 870 points. So it moved almost a 1-to-1. So not quite enough for me to move my stop loss to break even. So I just left it on. Now, when I started doing more of a deeper dive into the tariffs and everything, this would be yesterday afternoon / early evening for me, I started to realize I don't think I'm in a very good trade. So I ended up moving my stop loss. So my stop loss started out down here, okay, just below the 4-hour demand. So it started off there. And as I started realizing this thing is starting to get some wicks up top, a little bit of resistance, well, that's when I moved my stop loss. I decided to move it up under here just to limit the loss. Okay, I was in a 0.3% risk on my challenge accounts. So, what would have been a $750 risk on my 250K account, I cut it in half basically. So it was still a loss, but it was way smaller of a loss than it would have been if I just left that stop loss alone. Because as you can see, it ended up breaking through and going deeper, right? So even though it was a loss, I still feel like it was a partial win because I didn't lose that other $350, $400 in the challenge account itself. And we just reevaluate and go look for, just go kind of look at the top setups again, see what we can get in from there with the risk off atmosphere. So anyway, it's coming in today, guys. I'm looking at Aussie Swiss, Nikkei. and I was looking at New Zealand yen. You want to talk about the trading gods laughing at you? Let's take a look at my New Zealand yen. Okay, this is a trade that I should have been in, but then again, I shouldn't have because I didn't break my rules. I didn't jump the gun. Looking at this on a 4-hour, okay, so I had my daily demand, which is the yellow box, and then you see I have a couple demand zones inside on smaller time frames. 4-hour time frame, demand zone. Look at this crap. Look at this nonsense. When we gapped down on the Sunday open, we missed the zone by just like, what, 2 pips? Okay. So it missed my entry. And then obviously look what happened after. It just took off, right? So the trading gods were laughing at me. Ha ha, you missed your entry by 2 pips. And then it proceeded to run off. So I just thought that was kind of funny, especially after the red week I had last week. Oh, you're going to do me dirty like that right off the bat. So yeah, OT3, TBB, same entry, barely missed me. Yeah, it's but at the end of the day, I didn't want to front run it. It hit the daily demand, and oftentimes the daily zone itself will just take off when it hits the proximal line. But for me personally, for the set of rules I've bestowed upon myself, I like to see that confluence, that daily 4-hour supply or demand zone confluence. That just happens to be my edge. That's where I personally have the most data, and that's where my successes have been. I mean, I took my challenge accounts my first one. I took it about $9,000 into the hole. Okay, it's a 250K account. When I got down to that point, that's when I picked up the Edge Finder. Okay, this was back in late February, early March. As of the week before last, I brought it back over the 250K mark. So deep drawdown, 9,000 in the hole. I got the Edge Finder and I pulled myself out of the hole. Okay. So a little bit of a moral victory, but it's still not paying me. Okay. Still got to pass the account, right? So I can get it funded. And then I'll be square. But it just goes to show the power of really digging deeper into the fundamental and sentiment analysis, guys. You hear fundamental and technical analysis all over YouTube, especially technical analysis, right? The bright, shiny stuff, the sexy stuff. Fundamental analysis, not so much. Sentiment analysis, almost never. You really almost never hear about that. The COT report, the retail sentiment. Okay, like I was telling Nick last week, that's basically how I found him, was looking for sentiment analysis, looking for the retail sentiment. So anyway, it just goes to show the power of following fundamentals and sentiment, and then just using the technicals, using the chart to time your entry. So like he says all the time, just because New Zealand Swiss has given me a very bullish score of a 10 does not mean you go out there and smash the buy button. You still have to use the technicals to time this thing. My girlfriend left me, so bid over trading. Hazen, yeah. Hey, man, that was me back at the end of October. Exactly where you're at. And I kind of channeled my energy a lot harder into the trading. Now, I was already doing it hardcore. In fact, she hated it whenever I would start talking trading because she didn't know what the hell I was talking about. So I don't know if that was part of it or what, but yeah, nevertheless, I'm right there with you. That was me. That was me. But the only thing we can do is just channel our energy into our passion. All right. That's always a good thing from, getting out of a relationship. I mean, I know this isn't a segment on relationships, but if you look at it the right way and channel your energy the right way into what your passion is, what you can do to better your life, or read some more books, or whatever the case is, that's always a benefit, a benefit of getting out of those relationships. So I digress from that point, but yeah, you focus on trading. No, that's good stuff. So anyway, back to my setups. Now, I'm in a trade. I just got into this trade on the Aussie Swiss. Okay, it's giving us a bullish score of an 8 right here. So I did just hop into this. I want to kind of dissect this a little bit with you guys, just to kind of get an understanding of why the heck I hopped in. So again, bullish score from the Edge Finder, but that doesn't mean I buy. I got to go time it. So what I was looking at here on the Aussie Swiss, you kind of had a little bit of resistance point back here, back in time. And then you finally had an impulse leg that broke through that structure. Okay. So it really kind of started from there. We had another decline and then another push up. So in the wake of this most recent swing leg or swing low, okay, leg up, we left a daily demand zone in its wake. Well, why not use something down here? Why not? Now, this is the origin of the strong move up, right? Which is usually the higher probability spots where prices like to reverse, but only if there's an inefficiency in the market. If we take a look at all these candles on this daily time frame, when it comes to the wicks or the real bodies, okay, if you look left and right, every second candle, they overlap each other all throughout here. The wicks, the bodies, doesn't matter, right? This candle overlaps this candle because of the wick. This candle overlaps this candle because of the wick, so on and so forth. The first inefficiency we had, or fair value gap, which is what most people refer to it as, is right up here. So we're taking the proximal line of the zone there to the bottom of that wick right there, and there's your gap, right? So that's the first inefficiency in this most recent leg up. So that's really where it starts for me. Where's the gap on the daily? And then I have to go down to the 4 hour to make sure I have a gap down there as well. Okay, so go down to the 4 hour time frame, and the gap looks like this. There's my 4 hour candle. Now, same thing down here. All these candles overlap each other. So that's an efficient market. Banks, big banks, institutions, hedge funds, they tackle inefficiencies, and they like the liquidity, which is unfilled orders, on the other side of that. That's the supply and demand zones. So if I draw this gap up, I got to be honest, this gap is a little bit on the puny side. Okay. There's your gap. Now that's pretty puny, right? If we zoom into that point, that white box, because we're looking at the top of the wick and we skip the leg out and we go to the bottom of the next one. That's right there. So that's pretty tiny, guys. That's not something I want to just do a limit order on, even though I'm getting the 4 hour daily demand zone confluence. Oh, by the way, I have liquidity, which is this red rectangle I drew up. All these buyers here, these buyers, these buyers, these buyers, they got to put their stop losses somewhere, right? So somewhere in this area, we got a pretty decent puddle of stop losses, which is sell orders, right? What do big banks and institutions need to fuel their buy orders? They need these sell orders, which just so happens to be at the top and even inside of the demand zone where the unfilled orders are, right? So this is really kind of where it all started for me on this trade here. Just making sure I got the confluences down and making sure I've got some type of a liquidity pocket like I do here, okay? And then dropping down to the 15 minute or 1 minute, 1 hour, I'm sorry. So 4 hour daily demand zone confluence. And then finally, guys, just to kind of get one more confluence, in other words, one set of eyes of supply and demand zone traders. Okay, I like to go down even further and just find a 1 hour. It's really kind of where it's at. So same thing on the 1 hour. We do have a gap right here, just above that, and kind of like this 4 hour. This 4 hour, it wasn't really that big. I mean, if we draw this gap up, there's your 1 hour gap. So I've got gaps. They're gaps nevertheless, even though they're not very strong. So because they're not that strong, I need to see a little bit of confirmation entry. So going on down to the smaller time frames, okay, down to a 15 minute, I kind of drew up this little bit of a downwards trend line right here. And I wanted to really kind of see a break of that, but more so, I wanted to see a new demand zone form. I kind of drew this up this morning before all this happened. So right before I was starting my own stream, my own live stream, okay, we also had a little bit of a supply zone form here. And I wanted to see a break of that structure, break of the supply, break of the structure, and then a return to a newly formed demand zone. This is where it gets a little complex, but it's all because I wanted to confirm it because the gaps wasn't giving me a whole lot of help, right? So anyway, 15 minutes gave me a nice demand zone inside. Now, remember, this is my 4 hour here, and then over here is my daily, right? This is my daily. So I just push it over here to get it out of the way because I already know I've hit the higher time frame. I also see that I'm starting to get that little swing up, right? Kind of making a little bit of a Chinese walk or a little bit of a bowl or cup, right? Cup and handle. I just call it a Chinese walk. I don't know why I do that. But nevertheless, we get this new 15-minute demand zone created. Nice, strong leg out. Volume spread analysis. In other words, the institutional type activity starts picking up. And then from there, just go down another couple time frames of the 5-minute and want to see a gap. So I basically want to see a couple gaps at least. If I see those gaps, then it's game on. So at this point, what I did was just kind of wait for the retracement back to the 15, okay, where you see the wick right there. So that's where I ended up getting into this trade. I'm following the fundamentals, following the sentiment analysis, okay, and then looking for a confirmation from this kind of swing down and back up. This break of structure was really what kind of set me off, because at this point on a smaller time frame, it's starting to form higher highs and higher lows. Okay, so that's where I got into my entries. So we'll see how that goes. As far as take profit on this, I've basically got it set up here, but here's the key. Okay. And I need to set an alert here now that I see this. I'm going to set an alert right here, which is like halfway. And the reason I'm going to do that is because I do see a supply zone there that could potentially swing price down. Okay. I need to see where I entered break this supply zone in order for me to feel pretty good and comfortable. Okay. Consolidation, big, strong drop. Okay. Volume picks up. I have to be aware of that. So by the time price gets here, my entry, my stop loss is going to be moved up to break even or a cup of coffee. Okay. Enough to cover my swaps, cover my commissions. Okay. Maybe give me a cup of coffee, even though I don't drink coffee. That's just what I call it. But yeah, that's because it needs to prove that it's going to break through that supply. Okay. But ultimately, yeah, I've got my profit target. Now I don't want to say take profit. I'm like Nick in a lot of ways. I don't really close. I've never been one to close half my position early. I look for those trailing stops as well. And I totally agree with everything he said this morning when he said, I wanted to prove me wrong. I wanted to prove one of my swing lows or swing highs wrong before I get out of the trade, because I don't want to leave money on the table. Okay? If it turns around from the swing lows, the trailing stops up, then okay, I'm out of the trade. But until then, I don't want to cut my unrealized gains yet. So anyway, that's where I sit right now. Nothing left for me to do except wait until we hopefully, until this screams at me saying, hey, Tiger, we're just about to the 4-hour supply zone. Start paying attention to it. But yeah, looking pretty decent at the moment. So we'll let that go. Let's see here. What else have I got, ladies and gents? Yeah. Oh, yeah. And as far as the Japanese intervention concept, guys, just in looking at the COT report, it's no wonder. It's no wonder. Let's go back to the. So when I was looking at the Nikkei, the Japanese yen, look at this, 10% net change last week. Obviously, this report's accurate as of the previous Tuesday, right? So a week ago today. But do you not think that the big banks are prepping for this? Okay, they were net long prior to the COT report. They were net long by about 51%, but they dropped 10%. Now they're net short. Okay, they decreased 28,000 longs and they increased 25,000 shorts. 10% decline. Do you not think that's a big red sign right there? A big warning that they're about to do some stuff? Okay. That could happen today. It could happen next week. Who knows? But this is a very big tell to me to be careful with, dollar yen longs, euro yen longs. Maybe for a short-term trade, but definitely not a long-term swing or a position trade. I know a lot of people are kind of putting in their sell orders, sell limit orders to drop, to go down. I think it's pretty damn smart. I gotta say, I can't do that because of the challenge accounts. I can't have too big of a win. Okay, I kind of briefly talked about this last week, but it's just interesting when you trade by the prop firm rules. It's not like a cash account, right? You can't just have gigantic moves on a lot of these firms. So you kind of have to stick with the 2-to-1, 3-to-1 reward risk wins so that you're not winning too much and increase in your ESS scores, your equity stability scores, your consistency rule scores, right? Especially if you're in a funded account from the get-go, a direct funding account. A lot of them only give you a 15%, what's called a 15% consistency rule, meaning your largest winner cannot be over 15% of your total profits. So, that's something I've been studying up on a lot. And that's part of the reason I didn't have the greatest week last week, because I've been doing a lot of digging, trying to find an instant funding solution. It just so happens I'm very similar to what Nick does. He talks about, a lot of small losses, a lot of break evens, but then goes for the home runs. That's pretty much the same thing I do. I might have one really good setup a week with the supply and demand zone, type of trading that I do. So it just doesn't jive very well. Now, the ones with the challenges, it does. Okay, I'm in a couple of those. I think 40% and 50% on the respective accounts is the consistency rule. That's a little more doable for me, but not the instant funding ESS and smaller consistency rules. So I got, that's been part of my digging, just trying to find a way to get instant fund. It's just not working out very well, but nevertheless, I digress. I'll just focus on my challenge accounts. One thing I wanted to let you guys know before I get out of here in a few minutes. Wow, this time really flew. Something really cool that I think everybody ought to check out is, and number one, this is my trading channel at Trade Like a Tiger. You guys, I'm on at 6:30 a.m. Central Standard Time until 8 a.m. So if you guys are looking for an earlier in the day, opportunity to check out some charts, check out some fundamentals of sentiment, just know that I pretty much am very similar to the way Nick trades. I just kind of go on to some smaller time frames, get a little more in depth, if you will, on trading rules on my supply and demand zones. But come and holler at me, come see me. But one thing I wanted to leave you guys with was, if you guys go on here, this is your homework. If you guys want to see and understand how the creation of money works, go type in Zeitgeist Addendum. And specifically, look for this video right here, Money Creation and Fractional Reserve Banking. When I took my Forex class back in 2015, and I went to Online Trading Academy, this was kind of how they left us. This was what they left us with at the very end of our week-long curriculum. How you take a dollar and throw that dollar in, and that dollar turns into $9 in its place, right? The money creation side of things. So I just thought that this might be something cool. If you guys want to go check it out, literally go watch. It's only 15 minutes long. This will both enlighten you, and it'll probably piss you off to say, none of this, of course, is financial advice. Absolutely right, Aizen. But it's just kind of an understanding of money, right? It's good to understand. It's good to know how the banks do this stuff. So I digress from that. And as far as the rest of the day, the pound, their unemployment claims, they had a higher amount, so the pound dropped. And I did find this interesting, that we had, let's see here. When it comes to our heat maps, the economic surprise meter, that the Swissies all the way down to a 0 now. So that is our new weakest currency if we're just isolating to the economic underperformance or the fundamental analysis. New Zealand and CAD looking pretty strong if we're just isolating to the fundamental report releases, right? So that's almost a trade plan just in itself. New Zealand Swiss longs, CAD Swiss longs, right? Now, obviously it's best to follow the top setups themselves, wait till they hop on, just so you can make sure and get the sentiment and technical readings in there. But yeah, that's basically it. I know this 30 minutes flew by quick. I'm going to continue to monitor my Aussie Swiss, and we'll go from there, guys. Follow your rules, follow Nick. He'll be back on obviously tomorrow morning if you want. If you'd like to check out some more of what I do is supply and demand specific, just hop on here to @Trade Like a Tiger. And I go through the Edge Finder all of my stream as well. So with that, ladies and gents, we've reached the end already. Have a wonderful day. Take care, and we'll be back on tomorrow.
Thanks again for watching today's show.
Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.